Good afternoon. Today is Monday, the 25th of July, 2011, and this video is brought to you by Realtic. Check out realtic.com. It is in my mind, the best trading and analysis platform there is out there, and that's what all these charts are that we're looking at. I keep my charts real simple, as a lot of you know. I like to look at price, volume, and moving averages, basically. There's nothing wrong with a lot of the oscillators and indicators, but for me, I like just that clarity of price. The market action is difficult and indecisive enough right now with all the political uncertainty. We've got earnings, obviously, that, just after the close today, Netflix reported they're currently trading down at 257, and we can take a look at a tick chart and see what that trading's been like. So we'll get down, looks to about 250. But the action is very volatile in the market overall, regardless of one individual stock and what their earnings might be. We still are consolidating with this what appears to be an inverted head and shoulders pattern on the S&P 500. So we're stuck below that 135.80-ish, 135 to 135.80 really is the band of resistance that, if overcome, could lead to continued new highs or new highs rather in the S&P 500. But right now we look at this as an important higher low on the daily time frame from the lows we saw just last Monday. And now we're seeing a slight pullback here today after really a rough opening, obviously. Let's frame that with a 2-minute chart of the last 2 days. You can see we opened right down near this yellow line here, and this is a pivot study. This is known as S2. It opened right near that S2 level, and the buyers did step in. If we take a look now at the 1-minute action, you can see that we had a slightly lower low first thing in the morning, but then the buyers came back in and took held control right up till late in the afternoon when the S&P 500 came down through that volume-weighted average price and closed slightly below it. As I had said over the weekend, I think the key level that we want to see the S&P 500 is, we want to see it hold at least 133. And today we came down really right at 133. The low was 133.16, and we came down right to that level, and we have a successful test of it. So we have a rising 5-day moving average. We have this 133 level, and if we can stay above that 133, then we still, on the daily chart, are looking constructive, and it wouldn't even be a disaster if we fell a little bit below that, but that's a key level that we want to keep our eye on for now. Last week, of course, we had seen a test of the prior breakout at 130, so we're making these little higher lows after these consolidations where the prior resistance is holding as support. So if we were to see it fall back down through that, that's not the type of constructive action we want to see, basically. So right now we have a rising 5-day moving average. We have a little bit of neutrality in here, and this 133, as you can see in this 30-minute time frame, is an important level for us to hold near term. The NASDAQ is obviously a little bit stronger. They've got, this market was down 0.2% versus a little bit more than 0.5% for the S&P 500, and it did close up above these previous high levels for the year. So yesterday we had seen, that is on Friday, close to a 10-year closing high for the Qs, and the market remains above that level. What I had said in the video over the weekend was we want to see it basically hold above 59. That I thought holding 59 this week would be important. So far we came down real close to that. 59.02 was actually the low today. So we held that, and let's see if we can continue to hold up. We've had this little pattern of higher highs and higher lows over the intermediate term, and now this 59 is basically in that level where if it was to break down below it, we would have a lower low, and that would at least make us near-term cautious, if not outright bearish. But we do still have that rising 5-day moving average that keeps a little bit more neutral. And again, we're up at highs. So the Russell 2000, on the daily time frame, this is really the more indecisive market, but we do still see this inverted head and shoulders pattern. It's just a really unclear or not very well defined neckline area. On the 30-minute time frame, this is going to be an important near-term level that we spoke about, 84 and a half-ish area. If the market can get above there and hold above there for a half hour or so, then that would be a good sign. But before we start thinking bullish, what we have to really look at is, let's just drill this down to the 10-minute time frame, and we can see that same 5-day moving average right in here. What we had in here was, this 84.50 is the key resistance near term, and this 83.50 right in here, we came down, tested the 5-day moving average, did get a bounce, but it failed, and this little level in here at 83.50, which we can see has been important, now we're back below it. So we're going to need to see at least 83.75 or 83.70 retaken out, and then of course 84.50 being the bigger level that if we were to get above 84.50, then I think we could see a move towards the top end of this consolidation. So for now, the Russell, I would say, is a little bit more bearish looking than the other indices, and that could be a little bit of a warning for us. Today we did have, of course, 2,400 declining stocks and 589 advancers. So the advanced decline line obviously took a big hit. Not as bad as you would have maybe expected, or actually I think you would have expected it to be a little bit better based on the way the market closed, only down 0.5%. And going to the semiconductors, this market is really just still a mess. We've got this 33.5 level that had been key resistance, and now we're finding we're battling that level once again. So it's really, you look at this time frame here, the daily that is, and realistically you look at a declining 50-day moving average, and that gives us reason to just say, it's neutral at best in here. We had a slight cut to new lows last week that didn't hold. We're getting a bounce, so just a little bit more neutrality. And the same would go for the financials, which we had noted this downtrend line, which was hit a week and a half ago, and that's up near about 1550. We have a declining 50-day moving average in here now, and had the same type of failed breakdown and a quick move higher, and now we've got some volatility kind of being bled out of these financials. So all in this market, we've got a lot of indecision. We're in the middle of earnings season. We've got all this economic news, political news, so now's a time to, as always, play a strong defense. Thanks.